Even though predicting the stock market is incredibly difficult and you might get beat by a blindfolded monkey drawing stocks out of a hat, it's sometimes fun to give your predictions for the stock market, and that's what I'm going to do today in What's Cooking episode 27. Let's make some predictions. Here we go. What's cooking, everybody? Welcome on in. Episode 27 of the What's Cooking podcast. Another Wednesday, another episode. Today, I want to start us off with some events that have recently taken place in life. Most notably, a pickleball tournament that I was participating in. Believe it or not, that's right. The multi-sport athlete that I am, trying to broaden my horizons. And you know, pickleball is a very fast-growing sport. It's a sport that can be played by people of all ages. Doesn't require a whole lot of physical ability. Obviously, it does help, but you can be physically limited and still have a moderate amount of success in the sport of pickleball. And so that's kind of makes it intriguing for people of all ages. And I think that's part of the reason why it's gotten a lot more popular. And so when I saw that my company was sponsoring a pickleball tournament and that as an employee I get a free entry into the tournament, I had to take them up on it. I mean, you're telling me I can go play sports for free and get food and just hang out and have a good time. I'm there. Thankfully, I was able to recruit my brother and we hit up the courts, decided to try our luck in some pickleball. We went to the intermediate level of the tournament. There was also beginner and advanced. I think that we are both more athletic than the average pickleball player at the place that we played. So I think that gives us an advantage in some sense, but also we don't really have the experience of some of these other pickleball players. So I think intermediate was probably the good choice for us to go. We showed up. We were ready to play. Came on out. And we quickly learned that there's a certain element of strategy in the game of pickleball that helps more than athleticism does. And if you guys have ever seen the meme where it's two guys playing ping pong and one guy is just working so hard and putting every ounce of energy into getting the ball back, and it seems like he's going 110% try-hard mode, and the guy across the table is just standing there, barely moving and returning it so easily every time. Just dink, dink, dink. He's everywhere, and he doesn't have to try nearly as hard. And the caption is something like experience versus degree or something like that, like education versus experience or something like that. But the point is, you don't have to be an athletic specimen to be successful at pickleball. And in fact, the people there that won and did the best at the tournament were not necessarily very athletic. They just had the pickleball experience, they had the strategy down, and they knew what they were doing. They knew the plan of attack, and they were able to pick us apart pretty easily. So it was cool and also humbling. But you know, when I play pickleball 3 days out of the year, you really can't expect a whole lot. So I think it was a fun time had by all, and it was humbling to see us get destroyed by some people that are double our age or maybe more. But you know, it's you put the time into it, you're going to get a lot better, as is with anything. So shout out to everybody that put on that pickleball tournament, and I had fun, and I had some great food, got to talk to some nice people, and I consider it a success. So there you go. There's my little intro with some recent events. The main part of today's episode, I'm not going to take a whole lot of time doing this. I feel like this is going to be one of the shorter episodes after last week's marathon. going to give you guys some 2023 financial predictions. And by no means am I claiming to be an expert on these fields of predictions. This is just the way that I see things happening. I could be 100% wrong. I could hit the nail on the head. Who knows? Only time will tell. But recently I've gotten more interested in the idea of making my predictions known so I can go back and visit them later on and see how I was thinking before all this information is gained throughout the year. Because when you are at the end of a year and you look back towards the beginning, you have a different perspective. And you think, oh, why didn't I just do this? Why didn't I invest in Tesla in 2011? Why didn't I buy Dogecoin when it crashed in 2020? Why didn't I do this and that? But at the time, you would have had no way of knowing that any of those things would take off. So that's why I've gotten more into kind of making my predictions known, making some documentation of what I'm thinking at the time, and then later on I'm able to go back and see kind of my thought process. So that's what I'm going to try to do here today. And it's going to be in, 5 categories that I have for you today. So it's going to be Dow Jones Industrial, which is a stock market index, S&P 500, which is Standard & Poor 500, Nasdaq Composite Index, which is another stock market index, and then we're going to do Bitcoin and Ethereum. So a couple stock market related ones, couple crypto related ones. Going to give you my thoughts on each of these, where I see them going, where they have been in the past, and why I see them the way I do. I don't think it's going to take very long because I didn't write a whole lot on each of these, but we're going to make our intentions known, and then we're going to get over to what's cooking, and we'll hit the road. So without further ado, let's get on into it. Starting off with the Dow Jones Industrial Average. This is going to be the stock market index that is the oldest and probably the most viewed, most kept track of, I guess you could say. The official description here is a stock market index of 30 prominent companies listed on stock exchanges in the United States. The Dow Jones Industrial Average is one of the oldest and most commonly followed equity indexes. And the way I think of Dow Jones, it doesn't exactly have a ton of the new and amazing tech stocks and up-and-coming ones. This is going to be more of your proven and stocks with longer track records. They get into some industrial stocks. They get into some of the energy and oil companies. But then I think they also have a couple newer ones like Apple, maybe Facebook at some point, Meta, but not exactly the most cutting edge technology going to be found in Dow Jones. It's just kind of a broad index, I guess. So here's what we have for Dow Jones. Last year, the Dow Jones Industrial Average was down 8.8% roughly. So that's going to be our reference point. Last year, down 8.8%. What have we seen so far this year from the Dow Jones? Well, it's been up, actually, since the start of 2023 up until the end of January, 1 month in the year. It's been up 1.7%. And of all the categories today, this is probably the least volatile that I'm going to be predicting. Dow Jones is pretty resilient. It's not going to get too highs with the highs. It's not going to get too low with the lows. It likes to hang out relatively toward the median. And so what we've seen last year is a down year, obviously, in pretty much all financial sectors. Dow Jones being down 8.8% is quite a bit for the Dow. That's significant. And we've started to see a little bit of recovery so far to start the year. I think that's going to continue. I don't think we're going to necessarily make all the ground back that we lost last year. So far, Dow is up 1.7 in 2023, My prediction for the end of 2023, Dow is going to finish up 3%. Might be a little underwhelming, but I think that there's going to be more pain ahead at some point. We've started to see a little bit of easing with the interest rates and everything, but I think that we're not out of the woods. We still have some more ground to cover, and we might have some rallies here and there. We might have some down periods. As always, it's not going to be a straight shot going up. It's not going to be a gradual slope. We're going to be up and down here and there. But the way I see this shaking out is Dow is going to be up probably around 3%, if I had to guess. I think that if you were to look around a couple months ago at the end of 2022, people were saying, oh man, this pain is going to continue into 2023. It's just going to be more of the same, and it's going to be a tough road ahead. Obviously, that hasn't been the case so far. 2023, we've had a really solid start. And, I think that a lot of times when you hear one resounding opinion getting sent across the stock market and everything, a lot of times the opposite becomes true. And I'll give you an example, is that in the end of 2021, when crypto was starting to take off, well, not starting to, but continuing to, Bitcoin was reaching all-time high, ETH was reaching all-time high. This was early November 21. You had people saying that Bitcoin is likely to reach 100K before the end of the year, and everyone just kind of filed that away as a conclusion that's already set in stone. It definitely did not happen. We went down to around 40K at the end of 2021, if I remember correctly, maybe upper 40s. But you can't just project current momentum across future days. You can't assume that the current state of everything is just going to continue on. You have to account for some turbulence and expect the unexpected. So that's the kind of approach I'm going to be taking today. And that's why I believe Dow Jones is going to rise slightly, and it's going to finish up on the year 3%. Next up, we have S&P 500. The Standard & Poor's 500, or simply the S&P 500, is a stock market index tracking the stock performance of 500 large companies listed on stock exchanges in the United States. So if you guys remember, Dow is going to be 30 stocks. S&P 500 is 500 stocks. So we have a ton more to keep track of here. Dow is only 30, S&P 500 is all the way up to 500. And so this gives us two new elements. One of them is, since we're only tracking the largest 500 companies, you would think that these companies would have a better track record, more proven success, and better performing overall. So you would think that this index is going to perform much better than the Dow. But when you have 500 companies, you have more room for error too than with 30. You're going to have more stocks that are going to perform poorly. You're going to have more stocks that perform well. And so you kind of have both ends of the spectrum there. And usually that balances out. S&P 500 is relatively not very volatile. Although last year it was kind of the exception, 2022, and not what anyone expected. I think the S&P 500, in the grand scheme of things, is slightly more volatile than Dow Jones, just because of all the tech stocks that they have in there at the top. And Dow Jones is going to be more of your, not necessarily growth stocks, but a little more dividend focused, I guess. And S&P 500 is a little more growth heavy. So that you kind of have to account for that. But let's look at the breakdown here. S&P 500 last year down 19.5% in 1 year. That is pretty terrible. So far this year, it is actually up 5.2% so far in the month of January. Good recovery, good start. We're about a quarter of the way to making up the ground that we lost. But, I think that we're going to continue to chip away at some of the losses that we incurred last year. I don't think, like I said, similar to the Dow, this is going to be a common theme. I don't think we're going to make up all the ground that we lost last year, all in one go of it, but we're going to have a little bit of a recovery year here. My prediction for the end of the year, S&P 500, it's going to finish up 8%. So I think we have already seen most of the growth that we're going to see this year with the S&P 500. We could go beyond 8% and then come back down, or we could just stay level and then come up to 8% at the end. But that's the way I see it going down. Who knows if we're in a fake bull rally right now? It's very possible that March and February and April kind of bring us back down to earth, even though we kind of have entire 2022 to do that. But I think this is going to be better year than what most people anticipate, and that's why I'm going to say S&P 500 up 8% on the year. Next up is the Nasdaq. It's our third and final stock market category for today. The Nasdaq Composite is a stock market index that includes almost all stocks listed on the Nasdaq Stock Exchange. Along with the Dow Jones Industrial Average and the S&P 500, is one of the three most followed stock market indices in the U.S. So, like I was saying, these are the three big ones. You might also hear about the Russell 1000, Russell 2000. Those are pretty popular as well, but didn't end up making it into the episode today. So Nasdaq has what I think it's like 2,500 stocks or something like that. I don't have the exact number on here, but it's even more stocks than the S&P 500. It's up in the thousands. Nasdaq, from what I remember, is even more tech heavy than the S&P 500, and which means it's going to be a little more volatile. And it has higher growth potential, but then it also has higher downside, or lower downside, I guess I should say. But let's take a look at the numbers here. Nasdaq last year down 33.1%. Woo! Yikes. So far this year, we have seen a recovery up 9.7%. So we've almost got 10% of that 33 back. Nasdaq, like I said, very tech heavy and growth heavy. So anytime we are in a bull market, it's going to probably be on the best end of that. Anytime we're in a bear market, it's going to be on the worst end of that. And my prediction for the end of the year for the Nasdaq, it's going to be up 12%. So, like I said, right now we're up 9.7 in the Nasdaq. I think it'll make it up to 12 later on. I think you're going to see my prediction, I guess, is going to be that we're going to go beyond what I anticipated and then end up pulling back to the numbers that I am presenting today. So I don't have a whole lot else to say about the Nasdaq. I think I am more familiar with the Dow Jones and the S&P 500. Nasdaq, the only thing I can really say is tech heavy, more volatile, still tracking a lot of popular stocks, and growth potential is through the roof, especially since last year we got beat up so much. I think Nasdaq has the highest ceiling of these three, but interest rates are they're high. They're high right now, and we got to get them under control. We got to fight inflation, continue to level off, hopefully, and quit increasing the rates. So we're not going to have a perfect year, but I think it's going to be a recovery year, and that's why I say Nasdaq going to find itself up 12% at the end of 2023. Let's move it on over into crypto. First up is going to be Bitcoin. Bitcoin is the first cryptocurrency ever created. If you guys didn't know, it's decentralized. It has a limited supply of 21 million Bitcoin. I did an entire episode on explaining Bitcoin if you guys want to check it out. go into the list of What's Cooking episodes, you're going to find one called Explaining Bitcoin. A lot of great user-friendly, beginner-friendly, entry-level Bitcoin explanations in that episode. Spent a lot of time taking notes and breaking it down for you guys. So I think that's a great place to start if you're unfamiliar. But today is just going to be predicting, not really explaining. Last year, Bitcoin was down, get ready for it, 65.4%. And a lot of that is because we had a insane 2021, and we had to hit the brakes a little bit. I mean, Bitcoin's even more volatile than the previous three, but yeah, 2022 was rough. We came back down to earth and then some. We dug a bit of a hole. So far this year, in 2023, we are up. Bitcoin is up 37.8%, which is really impressive. It's made back already a sizable chunk of what it lost. It still has a ton of room to go, though. I think that Bitcoin is not going to shoot up like we saw in 2021 this year. There's still so many stupid stuff going on in crypto with people going bankrupt and people lending out crypto and FTX and freaking Celsius, Voyager, Genesis, Luna. I mean, 2022 is a disaster as far as the trustability, the credibility of crypto. I mean, people are getting scammed left and right. Companies are shutting down. People are getting frauded. It's just a wild, wild west out there. I'm hoping to see some sort of regulation coming in around crypto practices and everything. I know we don't want to involve the government in Bitcoin and Ethereum and crypto because that's the whole purpose, is to be decentralized. But some of these companies need some guidelines at the end of the day, because what they're doing is not very friendly to the investor. And I think we could very much benefit from a little guidance. I think Bitcoin is going to do better than people think this year. The average people that would predict, I guess. A lot of people are saying don't even go anywhere near crypto. Especially Jim Cramer. You guys have heard me talk about him. He said I wouldn't touch crypto in a million years, and suddenly Bitcoin is up 37% since then. So that's kind of funny. But my prediction is for Bitcoin at the end of the year, it'll be up 50% from where it started. So Bitcoin started the year around 16 and some change thousand, 16,500 maybe. And so if we're up 50% from there, that means it's going to finish around 24,000, 25,000 in that neighborhood there. I think that's realistic for sure. I think Bitcoin could easily outperform that as well. But that's what I'm going to say, because we have so much ground to cover as far as the landscape and the image of crypto. And I think that's going to continue to hurt the industry and the landscape and the culture until we figure that stuff out. So I would consider it a success if Bitcoin was up 50%. Obviously, I think anyone would consider any asset a success if it was up 50% in a year, but that's what I'm hoping for. That's what I think we can achieve. I'm excited to see what crypto does this year. You know, we've all been waiting for the spot ETF of Bitcoin, because that would give some people who aren't really interested in purchasing crypto directly a chance to get in as an ETF. And people would put that in retirement accounts, and older people could just kind of put a small percentage of their allocation into that just to kind of get exposure to it, and they wouldn't have to go through the process of getting an account on an exchange and getting a hardware wallet and everything. They could just tell their asset managers to put a little sprinkle of their investment into a Bitcoin ETF. And I think that would be huge for the price of Bitcoin. And I think it would be huge for the future of Bitcoin. And just more accessibility means more usability and more adoption. And when we adopt Bitcoin, we're moving in the right direction. So there you have it. Bitcoin, my prediction will be up 50%. Right now we're up 37-ish%. So we'll see how that one pans out. Last but not least, we're going to head over to Ethereum. ETH, the second largest crypto by market cap. Ethereum is used a lot for smart contracts and NFTs. Once again, I have done an entire episode on Ethereum. If you guys are interested in learning more, check out my other What's Cooking episodes. You're going to find one that's called Explaining Ethereum. I go in depth about Vitalik Buterin and what he decided to create, which in turn to Ethereum, and why he created it, and where he was in the past and where he thinks it'll go in the future. And I spent a lot of time on that, and I appreciate everybody that's given it a listen. Last year, Ethereum was down 68.3%. And if you guys couldn't tell already, this whole list has gone in order from least volatile to most volatile. So now we've arrived at what I consider to be the most volatile, which is Ethereum, since it was down the most last year, and usually it's up the most when crypto's up. Although that hasn't been the case so far this year, because Bitcoin this year is up around 37%. ETH this year is only up around 31.2%. So Bitcoin's had the better start to 2023, which is not always the case. I think Ethereum is usually the larger gainer in the short term, I guess you could say. But I think Ethereum will succeed long term, and I think we don't exactly know what it's going to do short term. Obviously, NFTs have been getting pounded. Prices of NFTs have just fallen off a cliff ever since the 2021 craze of Bored Apes and everything. It's just the lack of utility. I think you're just buying a picture, and I know it's more than that, but the use cases are limited right now, and the perception of NFTs is still far from where it needs to be to get Ethereum to increase substantially. I mean, people are going to have to truly get educated on what some of the benefits of NFTs are. People are just kind of dismissing them, and it's kind of hurting Ethereum. Also, even though we just had the successful merge with Ethereum, there's still a lot of improvements that need to be made with gas fees. So those are some of my criticisms of Ethereum, I guess, as it stands today. But overall, I like Ethereum. I definitely have some in my cold storage hardware wallet, and I will continue to get more Ethereum in the future. I'll continue to dollar cost average into Bitcoin and Ethereum. I think I've mentioned that before, that's my strategy for crypto, is just kind of dollar cost average into the top two, because I think the gap between the second largest crypto and the third is substantial and enormous, and it's really a two-horse race in crypto as I see it. So my prediction for ETH, so far this year it's been up 31.2%. I'm going to say Ethereum will be up at the end of the year, up 60%. That means a higher percentage than Bitcoin will be up, because usually that's the way I've seen it behave, even though this year so far it's been different. ETH is super volatile, and I think that a recovery will benefit ETH more than it will Bitcoin, just based on the price movements that I've seen. Again, I could be way off. If you calculate a 60% gain from Ethereum at the start of the year was around 1,200, that'll put it around 1,900 to 2,000 range. So, I mean, it's good. It's less than half of what it was at its peak, but you got to start somewhere, and Ethereum has what it takes to get back to their previous highs. It's just gonna take time. It's just gonna take more education, more adoption by the masses, and time will tell if I am correct with these predictions. But that's the way I see things going down, guys. I'm gonna recap it once again, just so you remember. Dow Jones, my prediction is going to be up 3% in 2023. S&P 500, my prediction is going to be up 8%. Nasdaq, my prediction is up 12%. Bitcoin predicting up 50%. Ethereum up 60%. As you can see, I'm an optimistic guy. I think it's hard to go down any further than what we have gone down in 2022, and therefore we're due. We are due for a positive turn. And also I think that the factor of everyone continuing to say that more pain is ahead and we're not out of it yet, I think there's some reverse psychology in there. I think that things don't always go the way we think, and people can't predict stocks. It's just not possible. Unless you're Nancy Pelosi and you have inside information. That's been a hot topic lately. That I might save that for a different episode, but the Pelosi index. But it's tough. You don't know what's going to happen. There could be a lawsuit come out. There could be a huge earnings release that's way better than expected, and there's people that the retail investors could just join together and start meme investing into Bed Bath & Beyond and keep it from dying. Who knows what's going to happen, man? That's why all I can do is just sit here and think and predict, and I would not advise you to take any financial action based on what you've heard me say in this episode. I don't think anyone was considering doing that in the first place, but I would always like to confirm that is not a good idea. There you have it, guys. My financial predictions for 2023. Do you agree with me? Do you disagree? Let me know why. Let me know what you think. I'm always willing to have you on or just discuss in the DMs. It's going to be what's_cooking on Instagram, what's_cooking on Twitter. Got a YouTube channel, got a Facebook page. You know where to find me these days. If you've been listening by now, you know the drill. Before I get out of here, we're going to head over to What's Cooking, because it's time to see what is cooking in each of the 4 categories. What's cooking in sports? The Philadelphia Eagles continuing their dominance, destroy the 49ers in the NFC Championship game. It's pretty crazy to look back and see that the Eagles had to play the New York Giants and then the 49ers with a third-string quarterback, because I kind of feel like any other team in the NFL would be able to win those 2 games. I guess not any team, because the Giants are pretty solid. As a Chargers fan, I actually wanted Brian Daboll and still think he probably would be better than Staley, but that's not exactly a super tough path for the Eagles. But either way, they've shown that they are a force to be reckoned with, and their defense is legit. Defensive line especially. Holy moly, guys. So when they got all their sacks in that Niners game, obviously that's what they've been doing all year, but when they sacked Purdy and they injured him, it was like as he was throwing, his arm got hit and like bent back, and it turned out to be a pretty serious injury. So the backup comes in, Johnson. I don't remember exactly his name. I think his last name's Johnson. Comes in, has a drive or two, gets pretty much the exact same injury that Brock Purdy had. As he's throwing, arm gets hit. And now they got to scramble and put in Christian McCaffrey for a play or two. run some wildcat, try to think outside the box. They end up putting Brock Purdy back in the game and just have him hand the ball off the rest of the way. They had zero chance of winning when Purdy went down. And, I mean, it's tough. You've already had 2 quarterbacks go down this year, and now you've had 2 more go down. I don't know what to say. There's certain quarterbacks that seem to stay healthy better than others, and then there's quarterbacks that play for the 49ers that just get devastated. So tough season, well, I guess not a tough season overall, but a tough way to end it for the 49ers. Such a great roster everywhere except quarterback, pretty much. And that's probably the most important position. And if you don't have someone that can stay healthy and be consistent in that spot, you're not going to get super far. So 49ers are going to be looking around this offseason now that Purdy's out for like 6 months or so. I assume that either Jimmy G or Trey Lance will be out of town. I don't think they're going to keep both of them. Purdy will probably stay. One of those 2 will be gone, is my guess. We'll see how it shakes out, but other championship game this weekend was AFC, Chiefs-Bengals. Super close game, came down to the wire. Chiefs were ahead, and then Bengals tie it up. Chiefs were ahead, Bengals tie it up. Kept going like that until the end, where we had a few questionable calls. And I've been watching the Chiefs for a long time, since I watched the Chargers, and they have a tendency to get some favorable bounces, let's say. And not necessarily that they need these favorable bounces, but it just seems like they come at the most convenient times. For example, whenever the Chiefs play the Chargers and it goes to overtime, which happens quite frequently, rule number 1 in overtime is that Chiefs win the coin toss. And rule number 2 in overtime is that Travis Kelce will win the game. So those are the 2 overtime rules, and they always seem to go according to plan for the Chiefs. But to get back on task here, it was Chiefs-Bengals, and there was a play where the Chiefs had a 3rd down, and they got stopped, and they had to punt. But wait, there was a phantom whistle that was blown by a referee 70 yards away, and the clock malfunctioned, and the play didn't actually happen, so they had to redo the play. And the Chiefs, once again, got bailed out by getting a penalty on the Bengals. Questionable at best. Actually, I think that penalty was legit, but there was a different pass interference one that was pretty questionable. Just seems to benefit them at the right times. It's just the exact opposite of the Chargers. Everything that the Chargers struggle with is what the Chiefs are great at. And that is the difference between a mediocre team and an excellent team. So it's frustrating to watch, and I'm going to have to watch it again because I'm going to be watching the Super Bowl. Eagles-Chiefs should be a good game. I think the Eagles probably have top to bottom a better roster, but I think Mahomes and Kelce are just on another level, and they're going to be able to keep the Chiefs in the game for as long as necessary, if not take the lead and win. So will be interesting to watch. A couple weeks away, and who knows what'll happen, but exciting nonetheless. We actually have some breaking news here on What's Cooking. After I typed up the notes for this episode, I quickly checked my phone and saw that Sean Payton has been hired by the Denver Broncos. So now that's another excellent coach in our division. We have Andy Reid with Patrick Mahomes. We have Sean Payton with Russell Wilson. And now Chargers probably have the 3rd or 4th best coach. But I will say there was one positive note, and that is the Chargers just hired Kellen Moore from the Dallas Cowboys as our offensive coordinator. Kellen Moore has done an exceptional job with the Cowboys offense over the past couple of years. They've consistently finished top 5 in a number of categories that are very important. Also, the Cowboys usually have a very strong run game, so I'm hoping that Kellen Moore can come on over and bring some of the magical run game formula that he had with Dallas. That would be beautiful. That's what we need. In the NBA, we have Luka Doncic, a certain NBA player named Luka, if you've ever heard of him. He plays for a team called the Dallas Mavericks, which just happens to be my favorite team. Luka came back from an injury recently, and it was an ankle injury, I believe, that kept him out a few games. Came back and scored 53 points in his return, so sounds like he's back in action. There was a point in the first quarter where the Mavericks had 20 points total. 18 of those were from Luka. So that kind of tells you all you need to know about the Mavericks' point scoring distribution right now. It's a little too Luka heavy for my liking. We do have some great contributions from Spencer Dinwiddie, especially when Luka's out, but we need more consistent scoring from other sources, not named Luka. And I wonder if the Mavs are going to address this at the trade deadline. Usually All-Star Weekend is February. Trade deadline is shortly before. We'll see if the Mavs decide to shake up the roster or keep things the same. I've heard a lot of names getting thrown around, D'Angelo Russell included. I don't know how I feel about that, but I don't know. I mean, we're middle of the pack in the West. I feel like we're bouncing around 8th seed, 7th seed, around there. I would like us to make it up to the top 4 like we did last year, but as long as we're in the playoffs, I think we have a good chance with Luka. So, lastly, for sports, Novak Djokovic wins the Australian Open in straight sets versus Tsitsipas. I did not get a chance to see this live because it was being played in Australia, which means my time zone, it was around 2:30 a.m., 3 o'clock a.m. maybe. But it sounds like Djokovic handled this one pretty easily. I think there was actually a tiebreaker in the second set, but it was Djokovic at the Australian Open, so you kind of figure with no Rafa, no Roger there to get in his way, it's going to be relatively easy for Novak. That makes it his 22nd Grand Slam title. He is now tied with Rafa for the most all time. We have to assume that he's going to continue to extend that. Djokovic, like I said in my Tennis GOAT episode, probably the overall GOAT, probably the guy who's going to end up with the most and who's probably the most balanced when it comes to each surface. But, I'm going to be a Federer fan as long as I'm alive, so take that, Novak. What's cooking in finance? This is going to be a little bit of an educational snippet for you guys here. The Federal Open Market Committee, or also referred to as the FOMC, is a group of Federal Reserve officials responsible for setting benchmark interest rates. The committee meets at least 8 times a year, and after each meeting it announces a new interest rate target in an effort to keep inflation and employment steady. The next FOMC meeting starts Tuesday, January 31st, which is actually today as the time of the recording, and it ends Wednesday, February 1st, which is the day that this podcast is going to be released. So by the time you're listening to this, there's most likely a decision on the next interest rate level. The committee is expected to continue raising interest rates after 7 consecutive increases last year. The market is expecting an increase of 25 basis points, or 0.25%. There's a possibility that the Fed could increase rates by 50 basis points, or 0.5%, as it did after the last FOMC meeting, but seems like it's a little bit unlikely they're going to do that. Most people are forecasting 25 basis points. I think if we do get 25 basis points, it's going to cause a positive reaction in the market. It's a step in the right direction, as they say. And, I've said it before, these decisions and these meetings, when they get released, the market tends to overreact in the direction of whatever was decided. So if it's better than what we thought, stocks usually quickly jump up. If it's worse than what we thought, they quickly fall off. And even though it's not necessarily make or break depending on this one decision, that's how the stocks like to react. The short-term buyers and sellers will kind of play the news, and that's not really what I'm interested in doing, but that's just a heads up to anybody that's looking at charts and might be curious as to why that's happening. What's cooking in technology? As housing prices continue to escalate, there is one Las Vegas-based company that's offering a product that will not break the bank. And I actually saw this in a Graham Stephan video that was released a couple days ago. That's the reason why I'm including this. It's not necessarily a current event. It's just a cool technology thing that I saw. There's this company called Boxable, Boxabl. It's a rapidly growing startup that's gained popularity, partially thanks to Elon Musk, because Elon purchased one of these Boxable houses. But it's also grown thanks to the growing demand for tiny homes and a housing affordability crisis with no end in sight. Boxable has this flagship product that's called the Boxable Casita. It's a 20-foot by 20-foot accessory dwelling unit that can be delivered directly to a customer's backyard and is ready to occupy in an hour. The unit is fitted out as a studio apartment with full-size kitchen, bathroom, living room, and is expected to sell for around $50,000. I believe that's what they've been going for recently. These houses are built on an assembly line in a factory, and they can fold up and fold in and out for easy transportation. It's so crazy to think of a house being assembled in like an assembly line, like in a factory, not outside, not from the ground up, just putting the parts together, and then they fold and collapse, and then you ship the house to where you want to live, and then they fold it up, and supposedly it's actually pretty resistant. It's pretty sturdy, weather resilient, and they seem to have positive reviews so far. If Elon Musk purchased one, they must be worth something, rather. I mean, it's certainly innovative. I've never heard of a folding house before that can collapse and open up and is super small and a lot cheaper than what you'll find out there. So they're definitely going to be disrupting the real estate market and the housing sector. But who knows where the future lies for these people, if they're going to be able to scale this into larger boxables or just stick with the small home model. I'm excited to see where these guys take this company in the next direction. And you know what would be cool is if you just buy a bunch of these things and start renting them out as Airbnbs in big cities. That could be a good way to get some passive income. I might have to do some research on that if one day I decide to dabble in the real estate game. You know, I've been considering some other sources of passive income, but that one's a little more of a financial commitment than what I'm able to dedicate right now, so that'll be down the road, if at all. Got to keep them on the radar, though. Boxable houses. Go look them up if you haven't. There's some cool videos of them being assembled and folded up, and looks like you got everything, all the essentials wrapped up into a small little house. Cool idea, cool concept, and we'll have to see where it goes. What's cooking in video games? There is a SpongeBob SquarePants Cosmic Shake video game that has recently been released. Seems like people are enjoying it so far. I think it's received much better than the Battle for Bikini Bottom Rehydrated game that came out in 2020. That one was filled with glitches and weird mechanics and kind of lackluster gameplay and movement and stuff. Seems like so far Rehydrated is not quite as good as Cosmic Shake. Cosmic Shake has been better, so that's good to hear. Although you're probably not going to have anything that's going to touch the original Battle for Bikini Bottom because of how polished that game was and how much time they spent on that. But I've seen a lot of cool things. You can equip SpongeBob with the the Flash. Is it the Flash outfit or like the Quickster or whatever, that one episode where he says, you want to see me run to that mountain and back, you want to see me do it again. He's in that outfit and you can play as that. And there's other like skins that you can put on, and there's episode references and all that good stuff. So it's good to see that they're being true to the TV show. And I think that's the best chance you have to draw in audience is going back to the core of the show and getting those references in there. I don't think it's going to take off or become a long-time favorite for anybody. I'm interested to see some of the speedruns, though, because I know that the speedrunning community is going to be involved, as they are with Battle for Bikini Bottom. I'm going to have to look up some of the glitches and mechanics and see what people have found already. That's always fun when a game gets released, to see how quickly you can push those times down. But I don't think I'm ever going to get this game. I'll just be a spectator, if at all interested. I'll be on the sidelines for this one. I'm glad to see that SpongeBob is still in the mix in the video games, though. It's definitely been a successful franchise for many reasons, but there you go. If you're interested at all, SpongeBob Cosmic Shake, look it up on YouTube, Twitch. There's going to be people out there playing it. One other thing I want to toss in here, kind of funny. People who play Call of Duty, the hope is that the game will be good enough for you to stay engaged and entertained throughout the whole year until the next COD is released. That doesn't always turn out that way, especially in recent years. There's a YouTuber I watch called Marksman, who's like one of the best search and destroy players, one of the most well-known streamers for search and destroy Call of Duty. He's been playing the game forever. He has played the most recent COD, Modern Warfare 2, for a while now, and he's kind of getting sick of it. So what he's doing now is taking his talents over to Call of Duty Mobile. And I don't know exactly if he hooked this up to his PC and plays with keyboard and mouse, or if he hooked it up somehow with a controller. But he literally has a headset on and is like, has the full functionality of a console Call of Duty game inside of COD Mobile. And so my man goes into search and destroy games online with like a full squad of people on the mic, and they just go in and wreak havoc. They're doing team call outs. Yeah, I'm planting A, you flank around to B. He's one shot on the hill. Yeah, I got your back covered. I'm throwing a flash. all those MLG communication stuff. They're doing that in COD Mobile against 8-year-olds that are playing on their iPads. So they're just absolutely like running up the score on these poor kids, just running them out of the gym. But they're getting a kick out of it. They're having fun. And it's kind of a shame that it's gotten to that point with Call of Duty not being good enough to keep our attention spans and our entertainment. But listen, you got to get creative. You got to think outside the box. And it's definitely provided some entertainment for me so far. Hopefully other people feel the same. Call of Duty Mobile can be the savior in these trying times. But that'll do it for me, guys. Not quite a super long episode. Didn't have a whole lot of time this week, and things are busy in general, so I don't know what to expect going forward with the podcast. If it's going to be similar to what it's been, or if I'm going to try to get some more guests on, or if it's just going to be a little 50-minute segment here. But I'll keep you guys updated with my decisions if I ever decide to change things up, or if I decide to take things in a different direction. That will be announced if I ever come to that point. But this has been episode 27. Thank you all for tuning in. What's_cooking on Instagram, What's_cooking on Twitter. Thank you for listening. We will see you next Wednesday.
See ya!